I'll continue our What They Don't Want You to Know About Money series, Life and Death series, and simply continue on what I spoke about last time. I think the last time we spoke about the importance of life insurance and how to do a basic calculation of how much life cover you do require. Now, obviously, life and death can happen at any time, but one of the things which also means a lot are the people you surround yourself with in life. Now, what they don't want you to know about money is that you need to surround yourself with people who are going to add value and at least appreciate you in terms of you while you're here on this earth. One of the things you learn is that when you have money, there's an entourage. When you don't have, they're not there. And sometimes when you're ill, you're on your own. When I was in hospital, I remembered that very few people checked on my well-being, and it was simple because those who care tend to know where you are and what's going on. And surround yourself with those kinds of people whilst you're alive, because when you're in death, you're going to need some people who are going to be around your loved ones to help them to cope with your loss, and also to help them to basically be the runners and encourage them and show love. One of the things you need when you're talking the life and death series is that you need a will. And your will is a document which says what's going to happen to your assets and liabilities in the event of your death. And it's not just about the things you have, but it's also an instruction manual as to what should happen to your children, for example. So in your will, you're supposed to nominate a guardian. A guardian is someone who essentially would look after your children in your stead if you were to pass on. And this guardian should be someone, for example, who shares the same moral values as yourself, and you can trust them to raise your children. Besides the money element, the guardian is someone who's basically going to take your place. And many people forget in their will to nominate a guardian because they assume that their spouse is going to take the responsibility of raising the children. Now, one of the things we often also learn is that husbands and wife often can go and expire at the same time, in a car accident, in a plane crash. You need to have a plan in place for a guardian to look after your children, especially if your children are still young. So your will is important. It talks about your assets, your liabilities, and importantly, you nominate your guardian. Your will has to be witnessed as well, and it has to be reviewed regularly because life changes. How life changes, you have more children, or you move, or your assets and liabilities may increase, and therefore you need to review your will regularly. Your will also determine who will be the executor or the executor of your estate, the person who's going to have the letter of authority and the responsibility of making sure things are done the way you want them to be done. Often this can be your financial planning professional or your accountant or your lawyer, but that's really up to you. Make sure you nominate a competent person to be your executor. I always say, like I said in the divorce series, don't find cheerleaders when it's serious money business. A will is serious money business, no cheerleaders. Make sure you dot your I's and you cross your T's. Another important element to consider in your will is death tax. When you die, the government is going to ask for between 1/3 and 1/4 of what you are worth today. Take out a specific life policy which covers the liquidity of your deceased estate. Speak to your professional financial planning professional so that they can actually explain that to you. Because what happens is when you die, the receiver of revenue or your tax authority wants cash. They don't want shares, they don't want houses, they don't care about all that stuff. They want chankura, they want cash, they want dinero. So what you would normally do is take out a specific life policy which pays out in the event of your death the exact amount that would be required by the tax authorities. Again, you need to sit down with a competent financial planning pro so that you can actually work out what that amount is. So yes, we are talking something that's not comfortable, life and death. But remember, a will is so important. If you die without a will, your estate goes into what they call interstate succession and may take years to resolve, in which time your children may end up in poverty Or you'll have family members simply fighting for your stuff. The people who didn't care about you, who didn't come to see you in hospital, fighting for the stuff you leave. Be very important. Be very careful about that. Last thing about your will, if you're a business owner, make sure you have what they call a buy and sell policy between your partners, so that one policy pays each other's shares out in the event of death. So A's shares are bought by B if A dies. B's shares are bought by A if B dies. Because it's important, because the shares in the business you have, or in the partnership, or the investment club you're in, your spouse might not want to have any interest in that. They might simply want to get out and get what they can. So important. Business also requires you to consider the impact of your death. Key person insurance, so that you can be replaced and your business can carry on. I can talk for hours, but my details are on the screen. This is the Life and Death series. Let's start talking reality, because that's one of the things that they don't want you to know about money.